Most home service business owners have no idea if they're actually charging enough. Instead, they just say, I feel like we're charging enough. Here's a quick test. If your gross margins are not at least 50%, you are slowly killing your business. I'm Paul Maskill, CFO for $2 to $20 million home service businesses, blue collar trade companies. And in this video, we're going to walk through exactly how to put together a simple rule of thumb so you can check your pricing today so you'll finally know if your numbers make sense. Now, where we got to get started is, what does gross profit margin actually mean? Because most people don't know. And the reason I say that is, when I'm looking at most business owners' set of books, their QuickBooks Online, QuickBooks Desktop, when I look at their P&L statement, their chart of accounts are not set up in a way that they would actually know what their gross profit is. So what is gross profit? Gross profit is the revenue that comes in minus the cost of goods sold. So if you ever hear the term COGS, COGS, cost of goods sold, in the trades, in home service businesses, the two main things that go into cost of goods sold is your labor, so your direct labor, so all your technicians and installers out in the field delivering the work on a daily basis, and then all of the material that you're using, that you're selling to your customers. So if you're an electrician, it's the breakers, it's the wire, it's the outlets, all those things. If you're in the HVAC world, it's going to be your capacitors, your condensers, all the things that your customer is buying from you. And we got to make sure we're charging accordingly and marking up both of those two main categories properly, labor and material. Now, as you get a little bit more sophisticated, some people put other things in cost of goods sold, like their credit card transaction fees, or if you're offering financing, the financing fees that the company charges you, permits and inspections. So if you're pulling permits for local municipalities to do work, those would be a cost of goods sold. So there are other smaller things in there that are definitely cost of goods sold. If you're renting equipment, so if you need a trencher for a job and you're renting that trencher, that rental cost is part of cost of goods sold. So, but to keep this video as simple as possible, because of what I see on a daily basis, we're really just going to kind of focus on labor and material. Now, most owners, they price just based on the market, not on math. So what does that mean? They usually call around to 5 or 6 of their competitors, or they hear from their customers what your 5 or 6 competitors are going to charge. And we just kind of pick a number in there and say, that sounds about right. That seems like a fair price. We don't want to rip anybody off, but we need to charge enough. And we come up with a number. However, if we aren't using math, if we are not a data-driven company, we actually don't know if we are charging enough. So that is a big problem that I see. The other problem that I see is many business owners just have a random number that they mark things up by. Like, oh, that I add $100, or I mark it up 30%, or I, multiply it by 1.5 and then I do this. And they come up with all these crazy formulas, but it actually doesn't, the math doesn't make sense. It doesn't actually get us to where we need to be. So where do we actually need to be? Like I said, we need our gross profit to be 50%. So that means our cost of goods sold should be 50%. Now, as we get better, we like to kind of ratchet that up 50, 52, 54. A super healthy home service company is going to be at 60%. I very rarely see that happen, but when it does happen, it is a beautiful thing to see. So what that means is, if whatever you're selling, if you charge $100, the cost, all-in cost for that labor and material cannot be more than $50. So that's how we really start to understand, how do we actually mark things up. So when you think about it, it's pretty simple. You just double the cost of it. So if the widget is $25, we need to sell it for at least $50. Now, you've got to play with your margins a little bit, because sometimes when you're selling something that costs thousands and thousands of dollars, we might not be able to mark it up twice as much just because of the cost of it, and it could be prohibitive. So here's some quick math that you can run tonight. If you start thinking of and you can even just go into your QuickBooks or Xero or whatever you for accounting, look at all of your labor. Now, when I say all of your labor, I mean all of your labor, not just what you're paying people hourly, but we also have payroll tax. We also have workers' comp. We also have paid days off. We also have health insurance if you offer a 401k. All the cost associated with employing somebody needs to be accounted for that. So if we add all that up, say it adds up to $150,000. Now that means we need to be charging at least $300,000 for all of those costs in order to hit our other goals. And in other videos, other podcasts, we kind of get into the entire profit and loss statement. But if we hit 50% gross profit, we should then be able to pay for our overhead, pay for our office payroll, so the people that aren't in the field, and we should be able to pay for marketing and still have 15 to 20% left over. So what are some pitfalls? Now that you know how to do it, what are some pitfalls? One of the biggest issues I see is cost of labor needs to be calculated properly when you're starting to build out your price book or starting to figure out your pricing. If you pay somebody $25 an hour, it actually costs you around $50 to $75 an hour to employ that person, which means, say it's $75 an hour, we need to charge a minimum of $150 per hour before factoring in anything else. So why does it go from $25 an hour to $75 an hour? The number one thing is efficiency. So depending on your business model, in the service world, most service technicians, they're only actually working about half of the time, but we still have to pay them for the entire time, especially if we're paying them hourly. So if they're working an 8-hour day, they're actually only delivering service about 4 hours every day. And that's just the math. So we know we need to recoup those other 4 hours when they're at the supply house, or they're talking to a customer and getting a zero, or they're, loading up in the morning and they're cleaning out their van at the end of the day. They're taking a lunch, whatever it might be. So we got to factor in all of that. We also need to factor in payroll tax. So payroll tax isn't free. It's on, excuse me, it's on top of what we're paying our people. So we've got to factor that in. We also have to factor in workers' compensation. Depending on your industry, this could be a lot. If you're in the tree world and you offer tree services, your workers' compensation is a lot because the risk is very high. That is cost of employing somebody, and we need to factor it in. We also need to factor in paid days off. So if you're offering paid vacation or paid holidays, we got to recoup those costs throughout the year to all of our customers. If you're offering health insurance, the same thing. We got to recoup that cost. If you're offering 401k match, we got to recoup that cost. So that's why $25 an hour can turn into $75 an hour, which means we need to charge at least $150 an hour. Now, and that's just bare minimum. Now, $25 an hour is not a lot to pay somebody. If you're hiring a, really good master electrician or a journeyman plumber or whatever it might be, those people are going to be making six figures, whether it's through performance pay or you paying them salary or hourly. So that's why many, many very successful home service companies, especially in the licensed trades of plumbing, electrical, and HVAC, charge between $300 and $500 an hour because they have to recover all those costs. So don't just call around and pick something in the middle. Don't say, I don't want to be the most expensive, or I need to be the cheapest, or I don't want to be the cheapest. Don't make your decision on any of those. Instead, we need to actually do the math. Another pitfall I see, so on top of figuring out the cost of labor, is estimating material and not updating our material price. So both of those. So one, if we just say, it's about $100 of material, I see so many business owners get stuck in that trap when, to give you an example, maybe you're selling, I don't know, say you're selling windows and doors, and you know the cost of the window and you factor that in. Say the window's $400, so you're going to charge $800 for the window if you want to hit 50%. What a lot of times gets missed is all the other expenses that go into putting in that window. There's going to be caulk, there's going to be glue, there's going to be nails, there's going to be shims, there might be some other wood. There's going to be all these other things that go into it that a lot of times we miss the mark on significantly. We say, it's about $100, when really maybe it's $200. So if it's $200, that means we need to charge $400 for all of that stuff, because that stuff costs money and it adds up. So don't just estimate, it's normally around $100 of material. Go back and look or do the math and figure out exactly what that is. Same thing with like the fixed thing. So using that window example, whatever it is that you're buying and installing for your customers, whether it's windows, doors, breakers, panels, hot water tanks, whatever it might be, get your pricing updated regularly from your supply house, from your vendor, and update your pricing accordingly. Now, depending on if you're using something like Service Titan, you might be able to do a lot of that automatically. But I see a lot of businesses, they don't actually check the price all the time, maybe because their technicians are just the ones going to the supply house and getting things. And then before we know it, we're missing the mark on our margins because we haven't updated the cost, which means we haven't updated the price. So at the end of the day, this just comes down with having some good systems and processes, using math, and taking the emotion out of it. The number that you have to charge, because once you go through this exercise, what's going to happen many times, you're going to be like, there's no way I can charge that. Those numbers don't lie. That's what we need to charge to deliver the value that we're promising our customers. So going back to the labor thing, if we offer paid days off and we offer health insurance, and we pay somebody really well and we offer a 401k, that means we're able to attract really, really good people, which means we're going to deliver a really, really, really good experience. So please, please, please let the numbers dictate that and use the 50% rule. The 50% rule just makes it super simple. What's our cost of labor? What's our cost of material? Let's double it. And that's what we need to charge in order to hit 50% gross profit. Now, there is way more to this, but this is, super big, high level rule of thumb. The reason we're keeping it high level in this video is because most businesses aren't even doing this. So that's what we want to do today. If this helped you, hit that subscribe button. Every week, I share real strategies to help business owners like you in the home service space, in the blue collar world, fix cash flow and scale with confidence. Don't fly blind. Use your numbers, get clarity so you can get to where you actually want to go. If you do need help with pricing, if you go to thebluecollaradvisors.com, you go there, you can actually download a pricing calculator. It's going to show you exactly how you need to price. You just put in all of your costs and it'll spit out the price of what you need to charge in order to achieve your financial goals. So that's all I got for this video. If you like what you see, hit the subscribe button, check out the other videos, and we'll chat soon.